All right. Okay, everyone, thank you so much for joining. Welcome to the Passive Income and Chill podcast again. My name is Nana Alice Nairco, and today we have an amazing guest, Charles. Charles,
Sorry.
that's all right. Go ahead and introduce yourself to everyone. The man with the plan.
Yeah, thanks for having me, Charles Oglesby, also known as Todd Millionaire. Man, I have a background in finance. I graduated from college with a degree in finance, began working as a financial advisor. And then what I did is I decided that I wanted to level up a little bit. And so I started working in private client banking, and that was a really cool experience. And then from there, I went to law school. And so I went to law school, did that whole thing. And I think I realized that I wanted to figure out a way to merge those two careers together, the prior career of finance and the current career of law. And so I started working in a family office, high level family office, where the actual family was worth about 200 million. And I got a chance to see a lot of really, really cool creative things that they were putting together. And I just saw this constant theme that everyone was doing all these things together as a group, and we were left out. And
Mhm.
so I wanted to figure out a way for us to collectively start buying these assets, investing in these assets, generating wealth. Because I knew that the sum of us working together would still achieve a great result for all of us. And so I started a company called Todd Capital. Todd Capital, in the beginning, was just us working together and buying stocks. Then we moved on to buying real estate. And then I learned that you actually can reach more people teaching them how to do it than doing it on their behalf or doing it in collaboration with them, which
Mhm.
is interesting because when you work in this space as like an individual, when you're taught to be like job, 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 you're like, I got to be that man. I got to be the smartest. Everybody has to come to me if they want to work with me. And
Right.
so I was blown away when I realized that I could just make a bigger impact and also more money by teaching people what I know and just kind of giving that away. And then also having to go back to the lab and then learn more. So yeah, we've been doing this for about 5 years. It was not overnight,
Yeah.
but when we hit that 2020 mark, we really lit fire, and here we are today.
That's awesome. Well, we actually have some things in common because I also went to law school. So, yeah, I'm a former practicing attorney. I don't practice anymore, but I definitely know that feeling of getting into that space and that world, and you're like, okay, all these people are succeeding and climbing, but I don't really see the same path happening for our people. So, I really understand that for sure. So, would you say what is your favorite or main source of passive income? You kind of touched
Mm,
on stocks and real estate, but
yeah,
of the two or of any others that you do, which ones
yeah.
would you say are your favorite?
You know what's interesting is I've fallen in love with dividends, dividend
Mm.
paying stocks. And the reason why I like
Before
dividends,
you move on, sorry, can you explain to folks what dividend stocks are?
yeah. So there's a bunch of different types of companies. So you have like your small cap, your mid cap, your large cap companies. And as companies go through different phases and they mature and they become more consistently profitable, they start to return that cash to shareholders. So you newer companies, what they're going to be doing is they're going to be reinvesting their dividends and they're reinvesting their profits back into the business so they can grow into a larger business. That's how you grow a business, more cash. But once you've gotten to the point where you can't really grow too much, now you start looking to return that cash to your shareholders. So dividends are a function of the company paying out their net income to the shareholders because the shareholders own the company. So
Okay.
prior to that, you benefit because the share value increases. But once you get to a point where that company is so established, they dominate their space, they're not going anywhere, and now they start to pay it out in form of dividends. Now, different companies pay different types of dividends. So not different types, but you have essentially where you have like an actual like corporate company that's paying dividends, and you also have like a real estate investment trust that pays dividends, and then you have some holding companies that pay dividends. And so I own a combination of both.
Mhm.
ExxonMobil pays a dividend based off of their profit. I own a REIT, which is SPG, and they pay based off of their rental income. And then I also own a holding company, which is IEP. And what they do is they just buy a bunch of companies and then they return that cash to their shareholders. So the benefit of like a REIT or a holding company is they're likely going to pay a much larger dividend than like a corporation.
Okay.
Corporations, they pay dividends, but not that hefty. I'm always looking for like a 10% dividend or greater. That's always my goal, is 10% return.
That was my next question. Like, do you have a set criteria of the return that you want from a dividend? Like, I've seen
Yeah.
some people say, oh, minimum of 3%. But it sounds like you're going big or going home. You're going for
Yeah.
10.
Yeah.
Okay.
So of course there's risk with that, but there's also some strategies with finding a higher dividend paying stock. And so one of the things that I do and have done is I look at companies that are great companies that are getting bad press that are
Mhm.
still paying a significant dividend. Why? Because you get what's called like an accidental high yielder. And
Okay.
so, for example, SPG, I want to say it's about a $200 share, approximately $200 a share. I think it was might have been like 120. So let's say it's selling for 120. In good times, their dividend was like 9 to 10%. No, their dividend was like 5%. But then what
Okay.
happened when COVID happened, malls got closed. There was so much doom and gloom forecasted that the stock got cut from $100 per share to $50 per share.
Wow.
Now that $5, $6 dividend is now a 10% dividend yield. So what I do
Wow.
is I come in and I grab a bunch of shares at the $50 rate, and then it
Mm.
increases in value back to $100, but my dividend is still locked in.
Wow.
So that's
That's
that's one of the things that I did with SPG and also did with Exxon. So Exxon, I bought them when they were selling it like, I want to say 40, $50 a share, and now they're trading at like 80 or 90 a share. So if you can get dividends at a discount, meaning you buy the stock at a discount, but the dividend is still the same, now you're going to
mhm.
be having some upside, because not only do you get the appreciation when the stock goes back to where it fell from, you're also going to be getting that dividend at a higher yield, because most
Mhm.
people, the reason why they are getting 3%, 4% is because they're not finding value in the stock. They're just buying at the top. And
Right.
that, in my opinion, is not investing. Anybody can just throw stocks at something that's getting good press. It takes an actual eye to find opportunity where other people don't see that opportunity.
Okay, so do you, with your dividend investing, do you invest in like a large number of stocks or ETFs, or do you have like a set five or set 10 or whatever that you consistently invest in?
Yeah, I would say it's very concentrated. Um, you can diversify. I just chose not to because I found very, very good ones that I liked a lot. So,
Hmm.
especially when you get them on a discount, like if you can buy Exxon, which is like one of the largest, if not the largest oil company in the world, and you can get it for half off, that's a deal. And granted, I didn't land here like straight out the gate. What
Right.
I did is I had gone to school for finance. I was like, man, I know everything about stocks. I should be making money. And so I was watching CNBC. They're telling me hot stocks to buy. I was watching Jim Cramer. He was telling me what to
Hmm.
buy.
Yelling
And
at us all the time.
yeah, and so I would buy those stocks and they wouldn't perform for me. In fact, a lot of times they would lose money because if it's on the front page of the news, it's more than likely too late. And so what I did is I was like, man, I thought I knew about investing. I thought I was going to buy stuff and it was going to make money, but that's not working out for me. So what I did is I got in the lab and I started to research a lot of investors, but more specifically Warren Buffett. And I found a fellow on from Warren Buffett to Benjamin Graham, and I learned the concept of value investing. Where value
Mm.
investing is where you buy something. It's like where you buy a dollar for 10 cents, or where you
Okay.
buy a dollar for 20 cents, and that's what you're looking for. You're looking to buy something that should be valued here at a discount. But I would say that the reason why I'm able to just buy a few companies and still fund my lifestyle is because I started a business. And
Hmm.
so I started the business. I made a bunch of money in the business. And then instead of taking that money and buying fancy stuff, although I have bought some fancy stuff, I didn't just all buy fancy stuff.
Yeah.
I put it into dividends. And
Yeah.
the reason why I like dividends better than any other stream of income that I have is it always comes on the day it's coming.
Yeah, so they usually have like a date that they're paying out, right? And there's no ifs, ands, or buts about it.
Nope. No
Yeah.
ifs, ands, or
So
buts. They pay that dividend.
You mentioned something though. I like to call it getting active to get passive, where you started a business, right? And then instead of just taking that profit and living life with it, you funneled it into your passive income sources. And I think a
Hmm.
lot of people miss that. I know I missed that when I first started my business. Like the first time I started making money myself, not from my employer, I was just going ham. I was just like, oh, this is like, free money. And it took me a while, to be frank, to realize that no, I can take this money and instead of using, because it's still active income, even when I first started my business. So, I started doing Airbnb and short-term rentals, and I was managing everything myself. And then I started hosting for other people. So that was more somewhat passive, but still active income. And of course, before that, I was practicing as an attorney. But it took me a while to realize, like, I can take that money, that active income that I'm trading my time for, and put it into resources like dividends or things that are going to make assets that are actually going to make passive income. I honestly didn't really start thinking that way until 2020. I don't know what it is about 2020. Well, I do know, but it shifted, I feel like, a lot of people's mindsets, and that was myself included. It's unfortunate that it took all that to do it, but it did. So what would you say to people who are just now starting to think this way? How could they start to make moves in this direction?
Mm. You got to go all in. I have a mastermind, and we were talking about the 4 levels of action. And so the book 10X Rule, the whole premise is that in order for you to find success in anything that you're doing, you have to take 10X the level of actions. And so what are the 4 level of actions? The first level of action is doing nothing. Most people are doing nothing, and what they don't realize is that it actually takes energy to do nothing. Why? Because you're going to be making excuses for why you're not accomplishing things. You're going to be getting creative, telling people like, oh, well, it's this person that's holding me back. It's that thing that's not letting me do it. And so it takes energy to do nothing. The second is retreating. Some people are falling backwards, whether it's because they're afraid of success or because they've had some prior mistakes that have kind of rubbed them the wrong way. They've had bad experiences. They got burned on an investment, something like that. They're retreating. And they're just hoarding what they have. And that's what a lot of people do during a recession. The third is taking average levels of actions. And what most people do when they get into business, they treat it like a job, and they want to just take average level of action. They expect to show up and be paid. I'm going to post 1 time a day. I'm going to post 3 times a day. I'm going to go live once a week. I'm going to post a podcast once a week. But the 4th level of action is called massive action. Massive action is when you burn the house down, and that's what's required to become successful. So if you're looking to approach this, you have to take massive action. The only reason why people know my name is because I post 20 times a day. I was dropping a podcast every single day. I tweet all the time. So my tweets are getting likes and shares and retweets, and my posts are getting reshared. And I'll show up on an Instagram live, or I'll do your conference. I'll go on somebody else's podcast. And so that's the way that you have to approach it, whatever you're doing. I don't care if it's Airbnb. I don't care if it's Turo. I don't care if it's trucking. I don't care if it's vending. All these different things. What separates the successful from the unsuccessful is they went massive.
Yeah.
You don't know anybody who was successful from 1 truck or 1 Airbnb.
Right. Yeah, you're lighting a fire under my, I was gonna say my ass, but like, that is so true, because I gained success with Airbnb because at one point I had 20 Airbnbs all running at the same time. You said you post 20 times a day. That's phenomenal. Here I am with my 4 or 5. But I like that, like I said, getting active to get passive. Like, you're doing the active work in order to get passive. So do you have like, I love the FIRE community, which for those of you who might not know, it's, what is it? Financial independence, retire early. Yeah. So do you have any like goals like that with what you're doing? Like, do you have an end goal, or is this just like, you're so passionate about it, this is what you want to do and do for as long as you can?
Interestingly enough, I was very inspired by that community. And quite honestly, I think I am financially independent, and I have retired early. That's why I say I golf every day. That's what I do for a living. I golf every day. And so the way that I did that, though, was business to dividends. And so my dividends pay my mortgage. My dividends pay for my son to go to school. And my dividends also kick off some extra cash for certain other things. And then I still have a business that generates whatever it's generating. But then I also have a pool of resources that if I ever need to pull from them, I can. But while I'm doing all that, I'm also working on a flip. So I have a flip in Detroit that should be finished in hopefully 30 days.
Nice.
I have my Turo that goes out, and that generates income. I, of course, sell my courses and content. And so I'm doing things that don't necessarily require me to get up in the morning and commute, to sit somewhere for 8 hours, and to then commute home and to be there 5 days a week. And so I would believe that I'm definitely financially independent. And I've quasi-retired. I tell people that I'm semi-retired because I still kind of work. So I still have my own office. I show up to my office and do those different things, but
Hmm.
I'm able to make so much more money now that I don't have a job and that I don't need the income than I was when I was relying on those income and that job to pay my money. So I
Yeah.
think that one thing that I tell people though is that your passive income is going to come different ways. I always thought my passive income was going to come through rental properties. I never thought it would come through dividends because I never had enough money for it to make sense in dividends.
Hmm.
But if you can generate that much money with cash and you could put it into dividends, now you're good. And this is one of the things I always tell professional athletes, and they don't listen to me. Instead of getting a $10 million check and
Yeah.
spending $9 million, get a $10 million check, invest it, and then live off the 10%. And now you get $1 million a year. And there's nothing you can't do if you're making $1 million a year.
That's very true. That's absolutely true. So ballpark it for people with, if you're comfortable, like to make the kind of money to be able to be independent and live off of dividends. Like how much generally do you need to invest to do that? And do you, okay, it's a two-parter. Do you bulk invest or do you also dollar cost average, meaning like you
Mhm.
continuously invest?
So I did to give context. In 2020, my business generated maybe about $3 million.
Okay.
And so that was 2020. And then in 2021, we did about another $1 million. And right now it probably does about 250. And
Okay.
so what I did is I put maybe like 500 into a bunch of dividend paying stocks that pay about 10%. So that generates enough money to take care of the mortgage, take care of my son's education, and then I just kind of live off of the rest. Everything else is still invested. And so that will be the reason
So
why
that
I'm able to
was
live off the dividends.
500,000 that you put
Yeah,
in at that time.
approximately.
Okay.
Yeah,
Okay. And that was from originally from 3 million in gross revenue from
right.
2020. Okay.
Yeah, I had to
So,
pay taxes.
oh yeah. that's
and
that's a new
and
thing.
salaries and yeah, so yeah.
Okay. So for someone who's, starting smaller, what would be your advice to them if they feel discouraged by, oh, I need so much money to make money from dividends?
Stop aiming at passive income and start aiming at massive income.
Mm,
Start aiming at what you can do for a lot of people. What service do you have the ability to provide at scale? Because you're not going to make your money off of a few clients. You're not going to make your money. I sold my course about 20,000 times. And so
nice.
what I did, and this is so interesting because a lot of people, what they think is that you have to charge high ticket to make big money. And I think that that's a mistake. And I've been having this conversation with people in my mastermind for so long.
Hi. Yeah.
When you first start a business, what you need to do is you need to provide a bunch of value for free. For free.
Okay.
That can be a podcast, that could be a free course, that could be a free ebook, that can be a free community. You need to provide a bunch of value to a lot of people for free. And then what you do is you can start charging lower ticket for your courses and for your content. And so then what you're going to do is, although it's the value is high, the value has to
Right.
be high, but let's
Okay.
sell it for an affordable price. So it's a no brainer. And so when I first released my options course, what I found is people would pay me $100 and they would make their $100 the very next day on their trade. And
Hmm.
so people are saying, there's people out here making thousands of dollars with your content. Why are you selling it for $100? Because the goal is scale. And also because a lot of people didn't know me. And so
Hmm.
now I can start to charge higher ticket. I can charge $2,000 to $5,000 for things. But I've also built this nest egg to where I have this foundation to where if I do or I don't get the higher ticket stuff, it doesn't make or break me. I'm not just sitting around hoping that a high ticket falls out of the sky. And this is how
Okay.
every business gets its start, unless they're essentially Tesla. But at some point, you have to have an affordable piece to your business. Either you start there or you land there, but you can't
Mm,
neglect affordability. If you look at
okay.
any company, if you look at Apple, when they first launched the iPhone, it was $1,000 phone. They made a $200 phone, sales through the roof. That's what made Apple the company they are today. Tesla started with the Model S. Yeah, it was impressive. It was people liked it. They came up with the Model 3. Now it's $1 billion company. Either you
Mm,
start there or you end up there, but you have to be there. And too many entrepreneurs want to charge their worth and they want to tax folks, and then they wonder why they're struggling to hit six figures.
That's, it's so funny you brought this up because this is something that frankly I have been like investigating myself, the high ticket, like there's two communities out there in the entrepreneurship world, kind of like you talked about. There's that high ticket, charge as high as you can, you're valuable. And I understand that perspective. And I kind of come from that perspective a little bit. But I would say, especially in the last 6 months, I'm kind of like coming around. So I have low ticket and high ticket offers, of course, because I agree. I want to make sure there's affordability out there for people. But I think that especially if you really started your online entrepreneurship journey in 2020, a lot of us got spoiled. Like everybody and their mom was at home and had these stimulus checks to spend money and buy all this stuff. And now, there's more normalcy. People have competing interests when it comes to, or competing priorities when it comes to their dollars, right? So I really kind of am starting to see that piece as well. And it's very interesting. So it's kind of cool that you brought that up. But your stance is really start with low ticket and go from there.
I think that's the formula, but then again, I don't think it's either or. I
Hmm.
think that the concept of a funnel is everything that I just explained. The concept of a
Right.
funnel is you have a free lead magnet, you have a low ticket offer, and you have a higher ticket upsell. And
Right.
so we're having people who are saying either low ticket or high ticket, and they're realizing like it's all tickets. All
Mhm.
tickets matter. So we need to make
All,
sure we get all those
all the
tickets.
dollars. Yeah. Get all the
Yeah,
dollars.
because
Yeah.
I tell people like your higher ticket is going to serve as advertising for your lower ticket, and your lower ticket is going to serve as a potential upsell for your higher ticket. So you shouldn't neglect those. If you go inside of any store, they got it all. And so
Mm.
we should essentially have it all. But in the beginning, if you're looking to get traction, if you're looking to make an impact, I think that you have to at least start with free.
Okay.
At
Because I
least start
feel
with
like
free.
sometimes I see other people's like offers, and I always wonder, is there the thing where you are cannibalizing your own products when you have so many different offers
Mhm.
at different price points? What are your thoughts on that?
I think that you have to make sure that the offers make sense.
Okay.
And so you don't want to offer more of the same thing at a higher price.
Mm.
And I think that if that's because essentially what you're doing is everybody for the most part is teaching one thing. The difference between your higher ticket and your lower ticket is going to be the access to you. And so it's
Okay.
not necessarily going to be like, oh, if you come here, this is my real secret sauce. And it's just more of the same. Like,
This is
so
where it's
like that's
really
what
at.
right. Because now people aren't going to want to buy your cheaper stuff. They're not going to want to buy
Mm.
other stuff. It's like, why would I buy that if this is this? But if you
Mm.
can let them know that they're going to either get it faster, easier, or quicker, or whatever, there's another word for that, faster or easier with the higher ticket stuff, now it makes sense and you're not going to cannibalize it. But
Mm.
again, some people are going to say, you know what? I would love to go there and get it faster, but let me at least know what she's talking about now. So
Right.
I'll pay
Right.
you this for now. And so we say it's essentially you have to build out your value ladder, but what you're really doing is it's the do it yourself, the done with you, and the done for you. And each of
Mm.
those is just a different level in your platform. Now, some people what they're doing is they're just charging higher ticket for the do it yourself, and so they're saying, "Oh, my course is $2,000," and
Right.
I want to see what their numbers are like because
Mm.
I don't know if they're doing three. Granted, see the thing is me and Chris Johnson are very like when I started getting on this whole path, I was really close to Chris Johnson, and we're
Hmm.
still cool to this day. But I was selling my stuff for a higher ticket. I was like, I'm Charles, background in finance, law degree,
Hmm.
MBA. Like, nah,
Right.
y'all gonna pay.
Feeling myself.
And right. And so I was charging him like $1,000, maybe more for my content. And I kept seeing Chris posting $40,000 checks. He was making 40 grand, 50 grand a week.
Mm-hmm.
And I was like, bro, there must be something to this. Because I would
Yeah.
look at his page. I'm like, you're making 50 grand a week, but you're charging $40. Like
Yeah.
that doesn't make
Yeah.
any sense to me. And so I just tried it. I didn't try to make
Mm.
sense of it. I just did what he was doing. And I think that a lot of times what people will try to do is they'll try to make it make sense to them before they actually execute on why they're doing it. And so he would do a few things. One thing he would do is his prices would be affordable. And another thing he would do is he would have a Friday sale, an affordable Friday sale. And I never understood why he would do a Friday sale. Well, people get paid on Friday. People are in a good mood
Yeah.
on Friday.
Yep.
People actually have time to pay attention to what you're offering them on Friday, because during the week
Mhm.
they're all caught up in the hustle and bustle of life. And so I didn't realize that until I got on the other side of the Friday sale. I just started running it, and then I found some success.
Wow. You are dropping some gems that I didn't even expect to happen here. So
Right. We're
thank
supposed to talk
you.
about like
So
real estate, huh?
I know. Thank you so much. Well, getting back to it, but that was fire. So everyone, thank Charles for all of this. Um, Actually, I have two questions. One is random. Where does Todd Capital come from? Since your
Yeah.
name is
So
Charles, because for the longest time when I was following you, I swore your name was Charles. I mean,
yeah,
was Todd.
a lot of people ask me that question, and what I'll tell them is I always wanted to be an entrepreneur. Um, and in the process of becoming an entrepreneur, I started other companies. And so one of those companies was a necktie company. And so I wanted to have this like prestigious name for a necktie company. And one time we went to Vegas and we were all picking out like our Vegas names. And somebody said, "My name is Stacy Joe. My name is Willie Mack." And I was like, "My name is Hunter Todd." And so I was running around Vegas telling girls my name was Hunter Todd. And I just held on to the name Hunter Todd. Like I kind of started going by myself by calling people like, "My name is Hunter, Hunter Todd." And so when I started the necktie company, I said, "I'm gonna call it Hunter Todd Neckwear." It was just funny to me. And then I realized I went to a wedding and somebody asked me, like, I have a long answer for everything. I went to a wedding and someone was like, "You had a
It's
necktie
okay.
company. You into fashion?" I was like, "No, I'm not into fashion at all." And it dawned on me, like, I can't be in this space and dominate this space if I don't really know this space. And so I
Hmm.
was like, okay, I need to create a company around my actual education as opposed to just something to make money, because I
Right.
live this. I literally, like, if I'm not talking it, I'm reading it, I'm watching it, I'm meditating on it. Like, this is just what I do. And so that gives me an
Mhm.
edge and it separates me from the competition so much. So I dropped the name Hunter, held on to Todd, called it Todd Capital, and here we are. But I also think a lot of it comes from like either borderline imposter syndrome and not thinking that I was good enough to put my name on there and out there yet. And then also when I was building my business, I was also working a job and I didn't want my job to see my business and say, "Well, you can't do both."
Right.
So
Right.
I kind of wanted to like separate that so it's a complete entity that's out there and I don't run the risk of, because it's very difficult to just like quit job, build business. I believe you
Right.
have to do them simultaneously. And so
Yep.
in order for me to do it simultaneously, I had to kind of go incognito on the business.
I think that is such a gem and hopefully a game changer for a lot of people, because I know there are people, especially if you work in corporate America or you just have some sort of job. I have friends right now who they have fully completed courses that they're like, I can't put it out there because my job can't know. I just cannot do that. So I think, imposter syndrome is real. And if you're out there and you think it's just you, know that it's not. We got a full fledged millionaire here who experienced it before as well. And so, but the thing, I think the lesson in what you did is you found a way. And for you, that was using that pseudonym. You didn't let it stop you, right? So I think that is so important, a good takeaway for people as well. Um, so my next follow-up question is, and let me know how you are on time. But I just want to, everyone's talking about we're in a recession or heading towards a recession. What would be something that you would suggest people do to prepare or win in a recession?
Yeah. I would say don't stop. In fact, go harder. Recessions only impact people who execute at normal levels, average
Mhm.
people who are just working their job, and working a job is average. And one of the things about being average is people are going to celebrate your average. If you get up and you go to job and you take care of your kids, they're going to be like, "Good job." But if you are going to work, got a business on the side, got another job, you're investing, you're focused, you're not going to the club, you're not doing the vacations and the trips, you aren't doing the luxury stuff right now in this moment, now they're going to criticize you. They're going to say, "You need to live a
Mhm.
little, you need to let go, you're always working."
Yep.
And those are the people that are going to win in a recession. The people that don't let go, the people who they pass on the stuff that everybody else is doing that they say they need to live on. Though that's how you win in a recession. You don't win in a recession doing what everybody else does, because those are the people that get wiped out in a recession. Those are the people that lose their jobs or lose their home or lose their car, or whatever they might lose. And so the most important thing is to take more action than you think is necessary, to do more than you think is necessary. I think that's the way that you beat it. But I don't necessarily believe that we're heading into a recession. I think that
Okay.
I don't really listen to what anybody says. I make my own conclusions, and
Mm,
I'm looking at what's going on and I see the stock market kind of correcting, but I don't think that's the recession that people are talking about. And what
yeah.
makes it worse is I feel like that talk allows people to do nothing, because the people
Mm,
who do nothing are the people who are the most fearful. They don't move because they're scared. I would, but a recession's coming. But you
mm-hmm.
don't know a recession's coming. You don't even know if
Yeah.
recession's here, and you don't know if it's going to be a big or bad recession. All you know is do nothing and wait. That's never the solution.
Right.
That's
Right.
never the solution. My parents, they bought a house at the height of the market in 2008, and they
Yep. So
lost that
did I.
house. They lost that house.
Mm,
And what they did is they waited 3 years and they bought another one. They paid 330 for that house. That house is now worth about 750. And the mortgage is so low that they're just able to live their dreams. So
right.
a lot of people would say, well, you shouldn't have bought a house in 2008, 2009. But the mortgage on that house is like double, if not triple, than what the mortgage is in their current house. And they even have more equity. So you
Yeah.
can't lose, even if you lose. The only way you
Right.
lose is if you stop and do nothing. The only way they would
Yep.
have lost it, they would have said, oh, we lost our home. I guess she's going to rent forever. No. So as we're walking into whatever we're walking into, your responsibility is to take action, period. I'd rather you buy a house at the top of the market, F up and buy another one, than not buy anything. And then the market never comes to you, because the people that have been waiting for the market to fall to buy have still not bought anything.
Yep. Yep. That's absolutely true. So I think that is um the perfect advice, I think, for right now. Cause like you said, we don't know. We don't know. And there's no way for you to know. So you just gotta move the way you need to move for your own goals and success. So awesome, awesome. I've got one last question, two questions for you. One is, what is one book that you would recommend to anyone listening right now?
Man, I'm glad that I got the opportunity to interview Dr. Dennis Kimbrough in Atlanta about a month ago, because usually the answer to this question is Rich Dad Poor Dad. But I don't think Rich
Mhm.
Dad Poor Dad is necessarily for us. I think it's a great read, but I think the most essential an African American business owner or investor could read is Think and Grow Rich, A Black Choice. Why? Because it's
Mm.
filled with nothing but amazing stories of Black people who made it from nothing. I saw an Instagram post recently and it said, if I see another person who parents gave them a small loan of $100,000 and they had $150,000 career talking about their debt free, I'm a flip. And I was like,
Yep.
that's exactly why Dr. Dennis Kimbrough's books are helpful. He wrote two. He actually has written more than two, but the two most relevant are Wealth Choice, which is the success secrets of Black millionaires, and Think and Grow
Okay.
Rich, A Black Choice. Both books have choice in the book because it's a choice.
Yeah.
And it's just filled with stories of people who grew up an orphan, didn't have any money,
Mhm.
went to jail, all this horrible stuff, and they still came out on top.
I love
And
that.
so
I'm
I,
gonna add that to my list for sure.
yeah, and it's a great
Um,
audiobook too. He has a good narrator.
awesome, awesome. All right, and then my final question is, how can people listening or watching work with you, get to know you? Where can they find you?
Yeah, so the best place is the business Instagram. It's at Todd.capital, Todd.capital. You can also find all the courses on www.toddcapital.co, or join the mastermind, toddcapitalmastermind.com. We meet every single morning at 8 o'clock in the morning. We read books, we drop gems, we share wins, we inspire each other, we collaborate and work together, and we're pushing each other towards success. And so there's a lot of ways to work with me, or you can tap in with the Business Accelerator program, which is my one-on-one coaching and mentorship for $2,200 one time. We're setting up all your social media content. We're creating your Gumroad pages, your landing pages, your funnels, creating all your emails. We're setting it all up. All you got to do is just exist and get money. So, and you got to
Nice.
record your own content. So you got to
Right.
have some knowledge to bring to the table. But yeah, one
Okay.
of my most successful students, we tripled their following in a week. They ran their 4th of July sale, made a bunch of money, and now they're off to the races in less than a week. We got them a huge email
Wow.
list, and it's been a really cool experience just to see them win. But yeah, that's where you can find me.
Awesome, awesome. Well, guys, you heard it here. This is where you can work with Charles and his team and join his mastermind. And he's got so many offers available for you, basically to help you win in whatever you're trying to do, whether it's making passive income, getting into stocks, real estates, dividend investing, and all of those gems there. So thank you so very, very much. I'm very grateful to have you on the podcast. And make sure you follow Charles. What's your Instagram?
The business Instagram is at Todd.capital, and my personal is at Todd Billion. So whichever one you want to find me on. I'm more active on Twitter. I'll be tweeting my butt off, and that's real Todd Billion if you want to find me there. Also, check out the Tweet Talk podcast. We got about 200 episodes, and we just be going in. So check that out. You should see the image right there. Me and Raphael been rocking for about 3 or 4 years, if not longer. And people love that podcast. It's a different kind of podcast because it's not an interview podcast. It's just me being interviewed the whole time, every single episode. And
Oh, wow.
it'd be real rap raw. So
All right. I'm sure everyone will enjoy that. So thank you again. And everyone, I will see you next time. Bye.